Good morning, everyone. Sorry for the late start there. I'm a bit technologically challenged, so we managed to get through it. So here we are. So welcome, everyone, and thank you for joining us in this special webinar edition entitled U.S. Elections, America Decided. As always, I have with me Director, Investment Management Group at Richardson GMP, Garth Watson. Thanks again for joining us today, Garth.
Good morning.
A week ago today, I think it is safe today that many around the world, including myself, were surprised at the result and the announcement that the new president-elect of the United States was Donald J. Trump. What was also just as surprising was the reaction of the markets the next day. The consensus was that if Trump was elected, the markets could drop anywhere from 5 to 10% the following day. As it got later in the night, the election drew closer to confirming that Trump would win the election. The stock market futures were pointing towards a very ugly Wednesday. But as mentioned, at the opening, to everyone's surprise, the market actually opened up quite strongly on Wednesday. And in fact, yesterday, the Dow Jones is in record territory, I believe, right? And the final surprise was that in the election, the Republicans both won the Senate and the Congress. So 3 big surprises. So now I'm going to hand it over to Gareth to provide us with his insights and observations under the new Trump regime.
Thanks, Frank. And yes, obviously it was a huge surprise. I think it was even a surprise supposedly to Donald Trump himself, as he's let known on his interview for 60 Minutes on Sunday. There was always the possibility, admittedly it was small, but at the end of the day, if we just kind of review what happened here, the pollsters were incredibly wrong, or at least they were on a state-by-state basis. So let me just review exactly what happened here and why essentially everyone was as surprised as they were. Going into the election, and even with all of the controversy over the FBI investigation, the emails, and so on and so forth, Hillary Clinton was still polling ahead of Donald Trump on a national basis. Usually, before the election, it was somewhere between 4 to 5 points. In a way, those pollsters were somewhat correct in that Hillary did end up winning the popular vote, and they are still counting ballots. But for the most part, it is expected that she will have more votes overall than Donald Trump, but of course she lost the Electoral College process. Where the huge errors were the polls on a state-by-state basis, and of course with the Electoral College, that is the system that's used to determine the president, and national polls don't matter as much as state polls, because in almost all states except for 2, the person who gets the most votes in the state is the winner-take-all situation where they get all the electoral votes. Going into the election, there was about 8 states that were identified as swing states. The expectation was that Hillary would probably take about 6 of those 8, and in the end it was the other way around. It was Donald Trump taking 6 of those 8. The big shockers were the fact that he took states that weren't even being considered swing states, and those 2 were Michigan and Wisconsin. Now technically, Michigan has not been called yet. It's the only state outstanding that has not called its state for one candidate or the other, but at present, and it's likely because of absentee ballots, but at present Donald Trump is winning Michigan. Michigan and Wisconsin were part of what they called the blue wall for Democrats that they didn't think Republicans could penetrate, and Pennsylvania was also included in that. It also fell to the Republicans, and essentially what we saw here was a huge turnout, an unexpected huge turnout of the rural vote. And if you look at any of the maps out there that show where the voting occurred, you'll see massive amounts of red across the United States and little dots of blue. And the dots of blue represent cities. They represent the urban vote. So if you're in Pennsylvania, chances are if you lived in Philadelphia, you voted for Hillary Clinton. If you lived anywhere else in Pennsylvania, you voted for Donald Trump. In Michigan, if you lived in Detroit, you voted for Hillary Clinton. If you lived anywhere else in Michigan, you voted for Donald Trump. So it was clear that the rural vote came and turned out for Donald. What was also clear, though, is that Hillary Clinton just simply did not get out the vote that President Obama did during his campaigns. And there's all kinds of demographic breakdowns that show that fewer African Americans voted for Hillary, that showed that fewer white women voted for Hillary, and of course the overall white vote. But no matter how you shake it, at the end of the day, Donald Trump is the winner. So we had to move on, and of course the markets did move on. One thing that Frank did highlight that is extremely important about where things go from here is the fact that because the Democrats didn't get out the vote, they also were unsuccessful in taking the Senate, which was their hope. There were a number of close Senate battles. Simply put, if they had turned out the vote, they might have been able to take the Senate, but they fell short. And it looks like the final numbers now, Louisiana is still outstanding because they go through a two-stage process. They'll have another vote in December amongst two candidates, but it looks like it will probably be 52-48 for the Republicans. And the House of Representatives stayed in Republican hands. That was well expected, so not as much of a surprise. But if we go to the market reaction, which Frank highlighted, of course, it did not look good on late Tuesday, early Wednesday morning. The futures did plunge. At times, I believe it was down about 850 points. And that was an initial knee-jerk reaction, mainly by foreign investors, because a lot of these futures were falling over in Japan and overseas markets, where most people, quite frankly, like others, were scratching their heads saying, what on earth is going on here, and what can we expect? Because, on the whole, Donald Trump was very good at making speeches, but also not saying a lot about policy and what he would do as president. In fact, one late-night comic last night joked that we actually don't know what the J stands for in his name. This is how little we know about the man, and I actually still don't know what the J stands for in Donald J. Trump. So if you don't even know what his initial means, you're not even sure if you know what his policies are. And the initial knee-jerk reaction was, look, Donald Trump is not a politician. He has no record of service in any way, shape, or form to the United States of America. What on earth is going to happen with him in the office? And so, of course, there was a little bit of panic. The futures fell. But by the time the market opened, by the time the American investors came into play here, and we saw the futures in North America start to move, I think there was some reassurance. Now, before I get to that, I'll just highlight here what has happened since Donald Trump won. And we provided a chart here. Admittedly, it's only a 7-day chart, but it's one that's actually pretty impressive, especially on the Dow Jones. I mean, the Dow Jones alone is up almost 3.5% in 1 week, and probably more if we add on any gains from today. And the S&P 500 also impressive. I mean, a gain of 1.5% even in a week is pretty good for a stock market. So the returns have been good, but let's just take a, and actually before I get to the reasons why that's changed, I do want to just highlight here, and we've put this chart in a number of our reports and we've referred to it, and I don't want to put too much emphasis on this because I'm not a true believer that just because something's happened in the past, it definitely happens in the future. However, historical evidence does indicate that the best market returns for investors happens when you have a Republican Congress and President, which is exactly what you have right now. So you as investors hope that this table here is 100% correct and has 100% ability to predict the future, because if it does, it means that returns should be decent. However, let's just take a look at some of the reasons why I think the markets changed their very negative view to a very positive view in a very short period of time from early Wednesday morning to today. Even though Donald Trump didn't necessarily communicate a great deal about policy other than a bunch of one-liners such as build a wall and clear the swamp, when it came to finance, when it came to the financial markets, he did actually communicate a number of policies, which I believe the market looked at and said, if he actually puts this into place, it actually won't be necessarily bad for stock markets. More importantly, now because he has a Congress that is Republican, it's likely he'll be able to implement his policies a lot more quicker than President Obama was able to, because, of course, he had to deal with a Republican Congress. Some of those things that are good for corporate America. And when we list these things, you have to remember, I'm looking at these things from the perspective of the CEO office of corporate America. I'm not saying these things are always good things for the world, but these are good things for corporations. Number one, is tax relief. Donald Trump has campaigned he wants to cut taxes. That was not Hillary's view. She wanted to increase taxes on the more wealthy to pay for her programs, personal and corporate taxes. Now, on corporate taxes, this is big because right now the federal tax in the states is 35%. He wants to cut that all the way down to 15%. And in fact, that would bring him in line with what we have here in Canada. That's not a good thing for Canada because we have a tax advantage. People will come and employ people in Canada because they pay less corporate tax here than they do in the United States. If he eliminates that difference, then corporations will be indifferent about bringing jobs to Canada versus the U.S. So a good thing for the U.S. is the fact that corporate taxation will go down, which of course also means that the cost line of corporations goes down. Less money is going to the government and more money is being retained by corporations. That's good for shareholders. Number two, a corporate tax amnesty for offshore cash, or at least there's been an indication. So for example, Apple as a corporation has an incredible amount of cash, billions upon billions of dollars of cash. However, not all of it is in the United States of America. A lot of it is in countries around the world, and the reason why it's staying outside the U.S. is because if it's repatriated back to the United States, it will be taxed, and it will be taxed at a corporate tax rate of 35%. So Apple, not wanting to pay that tax, is just keeping the cash offshore. Big problem there, of course, is if you're keeping the cash offshore, you can't reinvest it in the United States of America. So Donald Trump has campaigned that he would like to either create an amnesty, so allow some of that cash to come back tax-free, or at least bring some of that cash back at a reduced corporate tax rate. In other words, make it beneficial or cost-effective for corporations, not just Apple, but many others around the world, to repatriate that cash back to the U.S. because he wants it spent and invested in the United States and not in other countries. So when it comes to corporate America, this is a big windfall if, in fact, he can pull this off, and I think he'll have a lot of support in Congress for this.
So, Gareth, one quick question. If he does pull this off and lowers the tax rates from 35 to 15, what do you say? What percentage of these companies that are keeping out of the U.S. may repatriate it back? Just off the top of your head.
I'll be honest with you, I have absolutely no clue because there might be other reasons why they would keep it offshore, but I think you have to examine that seriously on a case-by-case basis. I don't think there's a general number. I would think that most would be inclined to take advantage of it because this will be if there is an amnesty, it's not exactly something that will last forever. It'll probably be a certain time frame, and corporations will have to take advantage of it. And I think there'll be obviously an incentive for them to move on it because who knows what happens down the road. So if I'm a corporate CEO and I have a chance to pay less tax or no tax, quite frankly, who knows what he'll pull off here, you certainly have to consider it and take advantage of it if you can. So that could
definitely positive in the end that regardless of who goes, anybody that goes is going to add value to the U.S. economy.
I would say so. It would absolutely positively add value to the U.S. dollar because if you're Apple and you've been selling your products all over the world, you're doing them in foreign currencies. In order for you to repatriate that money and use it in the United States, you have to convert it to U.S. dollars. So we're talking about hundreds of billions of dollars of foreign currency transactions that will certainly keep, I think, the U.S. dollar elevated. Especially, this is off the topic of the election, but we also have interest rates potentially increasing. There's a lot of reasons why people are bullish on the U.S. dollar, and a corporate tax amnesty would be another incentive for the U.S. dollar to go higher.
Okay, thanks.
Regulation, and again, I mentioned that these are things that are good for corporate America. You might not think they're good overall for the world, but they're good for corporations. Corporations love it when government just gets the heck out of the way. And whether you're a bank or whether you are an oil and gas company or anything where you are regulated in some way, the fewer rules that you have, the more flexibility you have to operate. And Donald Trump has said that he believes there's far too much regulation. He wants to cut back on some of the regulations that have been put in place since 2008. Again, some people will view this as a very negative thing. They feel that regulations should be put in place to prevent a repeat of what happened in 2008. But essentially, Donald is saying, get out of the way, or we're going to get out of the way and let corporations run themselves. It obviously will we'll have to wait and see how effective any type of change in regulation would be, not understanding perhaps the exact consequences of reduced regulation, but from a perspective of the corporate CEO, they like the sound of less government interference. There's also going to be increased fiscal spending. Now, this was really something where you were going to get it whether you had Hillary or you had Donald. Both were campaigning on the fact that they need to put more money to work in the United States, and it needs to be fiscal spending, not relying on monetary policy necessarily in the Fed all the time, but for the government to return to putting money back into the U.S. economy. President Obama, you may recall a few years, it wasn't really that long ago, that we were talking about the U.S. debt situation being catastrophic, the debt ceiling not being raised by Congress. They were in a terrible situation. Well, the deficit actually has declined immensely in the United States over the past, let's just say, 4 years. That's going to change. Deficit spending is going to go up. There is going to be more debt issued. There's a bit of concern over this, but if you are a corporate CEO, you like the sound of the government putting more money to work, and depending on your business, you could be a huge beneficiary of this. If you're an engineering firm, you're loving the sound of this, because all that these politicians talk about are roads and bridges, and if your business is building roads and bridges, this is going to be a big windfall for those businesses over the next few years if, in fact, they carry through with that increased fiscal spending. So these are all things that are good for corporate America, and I wouldn't be surprised if come Wednesday morning, when the futures rebounded quickly and the market started to head higher, North American investors came to the realization that some of Trump's policies here from a financial standpoint actually were not terrible and were not going to inflict a great deal of damage on the U.S. economy. I think there was also recognition that, hey, one man or one woman can't destroy the U.S. economy. The U.S. economy is bigger than the presidency, and government policy only has so much effect on a economy that, quite frankly, runs itself. It doesn't need the government to run it. It's a monstrous machine that self-operates. And so I think there were some concerns that dissipated overnight from Tuesday night to Wednesday morning that Donald Trump actually had the ability to destroy America, financially speaking, that is. Now then, with respect to, I've just mentioned some good things for corporate America. I do want to highlight here to conclude just some things that Donald Trump is going to have to contend with in his first 4 years, maybe his only 4 years, who knows, of being President of the United States. First thing, of course, is the fact that interest rates are more biased to rise instead of fall in the United States. That's going to happen over the next 4 years. When and how many rate increases obviously is up for debate. Might even be one in December. But if you are about to spend a lot of money, fiscal spending, which usually means you are issuing debt to raise that money to spend, that means interest rates are going up. So the cost of financing on debt is going to rise, which means that interest costs on U.S. debt are going to rise, not just for corporations, but for individuals as well. That is an added cost of business that Donald Trump is going to have to contend with. And admittedly, politicians aren't very good about looking beyond, let's say, next week. They look very much in the present. But certainly managing the debt is going to be key here going forward. Number two, in the next 4 years, there will be a U.S. recession. It's almost inevitable. We are in the 7th year of a bull market. We are in one of the longest economic expansions in U.S. history. History would suggest that the United States is due for a recession in the coming couple of years. Recessions happen. You can't avoid them. The question is, can you make them shorter, and can you make their intensity decline? So there will be a recession most likely during his first term, and he will have to be prepared for that in terms of his policy response. Immigration policies that we don't focus as much on, we focus more on the human story of immigration than we do the financial story of immigration. But there is a huge financial component to the fact that, admittedly, there are illegal immigrants in the United States performing jobs and carrying out work and being paid for it. But admittedly, a lot of those jobs are jobs, they're not high-paying jobs. These are manual labor jobs. These are jobs that a lot of other Americans don't want. And as someone, I thought I heard a commentator say the other day, don't be fooled. Rich people aren't about to pick their own strawberries again, which was to say that there is a workforce in the United States, albeit perhaps illegal and from an immigration standpoint, that do contribute to the United States economy. And the idea of simply rounding them up and throwing them all out of the country is just simply unrealistic from an economic standpoint. There will be some that will go, without a doubt, the ones with the criminal records that Donald wants to get rid of. But to suggest that all 11 million illegal immigrants are about to leave the United States within the next 6 months is completely unrealistic. So there are some economic consequences here about what he does with immigration. So we do actually have to pay attention to that. Again, not just because of the human component to it, but also the financial component. There's been a great deal of discussion about trade policies. We know that he is not a fan of the Trans-Pacific Partnership. We know that he is not a fan of NAFTA, and that's more because he doesn't like how Mexico benefits from it. He's not hung up on the fact that Canadians are involved in this deal, but of course his argument is these deals are terrible and I could have done a better job. So I would caution people to think that somehow he will come in and eliminate all trade policy. That is unrealistic. We have the largest trading relationship on the planet with the Americans. Amongst two countries, ours is the biggest that there is in the world. So to think that he is about to come in and reintroduce tariffs and duties on the business that crosses our border, of which it's something like $1 billion every hour, is completely unrealistic. And I can assure you, of all the border states, and of which there are certainly a number that have Republican governors, there will be, quite frankly, hell to pay if that is the actual policy, because I believe out of 50 states, Canada, or 38 of the 50 states, Canada is the largest export market for them. So yes, there's a lot of words being thrown about, admittedly probably more directed at Mexico than Canada. There might be a couple tweaks here and there to trade deals and policies, but I do not see a first of all, a tearing up of the deal and a reintroduction of what we were doing, 23 years ago with tariffs and duties. I don't see that happening, and there might be some minor changes, but on the whole it would be very disruptive to the United States economy to basically throw out the trade deals that are currently in place and potentially on the table.
So Garrett, we're about to finish off here, but I just wanted to reflect back on our previous webinar where there was some talks prior to understanding who was going to be the next president, that a Trump presidency was actually good for the Canadian economy versus, let's say, a Hillary presidency. Can you maybe touch on some just key points of why that's the case, and now that we do have a Trump presidency, whether that's going to actually follow through?
Yeah, that was up for debate. I would say that there were compelling arguments either way. I think that people weren't that negative on Hillary because they knew she probably wouldn't change much, so the Canadian economy would continue on as is. There were concerns about Donald because of potential changes that he might make to NAFTA, which again I think are overblown. The appeal to Republicans probably focuses more on the energy space more than anything else, and of course this has to do with pipelines, Keystone's coming back into the picture, which was completely eliminated under Obama, which would have been eliminated if Clinton had won. The ability of the oil patch in Alberta and other places to get their oil to the States and not have to sell it at a discount because they can't get it out of the country. That's extremely influential, and we've already heard that Keystone is back on the table, but certainly still, I think, a ways to go before something gets actually approved. But that was probably where most of the sentiment was coming from, that it would be positive for Canada. It was probably more on the commodities. Okay. The commodities could benefit under Donald Trump. General trade, Donald Trump's still going to fight for the American worker and American jobs. And in a sense, if he does get pretty protectionist, it could be bad for Canada. I mean, especially, for example, in the auto market. We don't have much manufacturing left in this country. I think most people realize that. But the manufacturing that we do have, we do need to keep. And when it comes down to politics, at the end of the day, Donald Trump could care less about Canadian business. He is a businessman. He understands trade. He understands the need to have both import and export markets. That's why I don't think there's going to be a huge amount of change that comes. But to say that Donald Trump is always a positive thing for Canadian business is not necessarily the case. The last thing I'll just bring up here, I wrote down here technological investment versus the old way of doing things. Donald Trump won the Rust Belt because he appealed to a certain voter who probably works in industries that are dying. For example, the coal miners in West Virginia. He loves coal, of course, as he says. Hillary Clinton has been looking for new, more environmentally friendly way of doing things. Obviously, we knew she was going to lose West Virginia because the coal miners have absolutely no trust in her whatsoever. But you have to wonder, in order to keep those voters happy, can the United States move forward with new investment, with research and development, with new technologies, when in fact his base that's supporting him is one that relies on the old way of doing things, the one that does not want investments in the environment and change for the better, automation, assembly workers, manufacturing. It's a way of life. I mean, it's just a given that the world is moving towards a certain way of doing things. Will Trump almost kind of leave the United States behind everyone else because he's not willing to move forward with advancements, because he's not wanting to upset the base that put him into power in certain states that's known for manufacturing? So it'll be interesting to see how that develops. That's something that we won't be able to answer until the next election, quite frankly, and let's not talk about that because that's getting way too ahead of ourselves. And I think we're all a little bit hungover, so to speak, of the current election cycle that we've just had. I personally can't even put the TV on CNN anymore. I just simply pass over it. I just cannot stand it. I see the same faces over and over again, and I just move on to the next channel. And I think I'm going to do that for at least 2 years because I'm quite fed up with it. But anyway, these are just some things that I think Donald Trump, he's not going to have the honeymoon that Justin Trudeau had, that's for sure. In fact, probably his honeymoon's already over with the way that the press is going after some of his cabinet appointments. And there's going to be a whole lot of politics here to go, especially with the Supreme Court and other social issues, but not necessarily financial. But on the financial front, there are possibly some good things that come out of a Trump presidency, but also there are some risks that are overhanging his presidency that he will have to deal with that I've gone over here today. So it's not going to be smooth sailing. The question is whether he will have competent people in the right positions, and I can't answer that until we know who they are. And I probably can't answer that until they have time to implement policy and to put that into place. So with that, that would conclude my comments for today, and I will turn things back to Frank.
Thanks, Gareth. So I think, based on our, as I mentioned, our last presentation prior to the election, I think the main point to understand is that, as we had mentioned before, regardless of who the president would have been, no one person will bring down the economy, the U.S. economy. We'll have to wait and see based on what President Trump is going to deliver on his policies. At the same time, I think from a market and investment perspective, the market does not like uncertainty. Well, regardless of what anybody's opinion is, we know who the president is going to be for the next 4 years, and the market is pricing that in. So I wanted to thank everyone for joining in. I wanted to also remind everyone that this is being recorded, and we will be able to send it out for replay very shortly. We'll get that out as soon as possible. If there's any specific questions that you may have, please contact me by email or by phone, and we'll be more than happy to answer any of those questions. Thanks again, everyone, for joining, and we'll talk to you soon.